don't try and catch the top, people. Like, don't try and catch the top, Becky. 5-year deep trader. Like, what the fuck are you doing? That was the day that I had. And you know what happened? Like naturally I was in this trade and I was like, can I finally take my stop out? It's going to roll over. But like, when is that going to be? You know what I mean? Like, you can't just hold a trade indefinitely. Like, I don't have the pocketbook to just hold a trade indefinitely. I just don't. I am a retail trader. I got bills. I got kids. Like, I can't just put all my accounts on the line for a Hail Mary and accept no responsibility. That's not how I'm trying to be a trader. I need to be responsible and have risk management and a true system that I honor. Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1, for starting your day with calm intention. 1, to stay centered while you trade. And 1, to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description. Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Hey guys, so I'm Becky, host of Market Mamas, and I've been a futures day trader for over 5 years now. Market Mamas is mainly a trading psychology podcast. There's some technical episodes, but the predominant ones are psychology. However, we've had it for 2.5 years. Market Mamas is not a new podcast. And so I want to talk a little bit more about like my psychology in action by talking about the trades that I'm taking, because I'm active. I day trade the futures market every day, Monday through Friday. I'm a very active trader. I am a trading psychology coach at Blue Sky Trading Company, an excellent prop funding company in that space. And I'm really kind of have my fingers in all aspects of the trading world, but everything I do stems from my trading. Nothing that I have built, that I talk about, nothing at Market Mamas would have legs to stand on if I wasn't a trader, right? And so I want to just talk trading today. I have a strategy that's very multifaceted, very layered. I built it over years with a lot of different influences, and then one core mentor who's kind of woven like the structure of all of it. And then I have made it my own and, prioritized different things and set up my charts in different ways over the years and kind of leaned in and made my trading speak to me, because I think that we each can trade better when our trading fits with our personalities and the way we see the market and the times that we like to take trades. It has to really work with who we are as a person and how we see the market. And so for me, I like to trade value areas. I like to trade the trend, especially when I can figure out the trend based on larger time frames, weekly, daily, 4-hour, hourly, 15 minutes. That causes me to break it down into are we bullish, are we bearish, which time frames are which direction. I also use VWAP and the bands intraday to give me some direction on what's going on that day. And then structure breaks for a lot of my entry criteria or the levels that I'm waiting to see if they will hold or not for a directional move. And so all of this has kind of fused together. There's many, many layers and nuances to it. Different days will prioritize different types of analysis based on just what the situation is, what the cadence is. Are we following a trend or is it rotational? Because there's a very different approach to those different kinds of days. And so anyhow, that's kind of a very brief overview of my trading style, but I'll kind of get into it more in these videos. But what I want to do today is kind of go over like best day, worst day. And so I think maybe I'll even like start a series within Market Mamas of this last week of trading that I had. What did my best trading day look like? And what did my worst trading day look like? And not necessarily day, but like maybe the trade or the trade management. And so I am recording this on May 16th. And I want to talk about the week of May 11th, 2026. And I trade this week. I predominantly traded the futures market of ES. I do trade NQ and gold, and I took some trades in both of those this week as well. But the trades that I'm going to talk about, both of these days are ES, MES days. Okay, let's just get into this. I'm just going to have to rip the Band-Aid off. That's what's going on. We're going to start with the day that I had regret and I wished that I had done it differently. And that would be Thursday, May 14th. Okay, I'm going to share some screens so I can show you guys the charts and what they look like at the time. Now, I trade different accounts, personal and my profiting accounts. And so I'm just going to, that's why I'm showing you one is on Ninja and one is at Blue Sky Tradea chart. And so this first one is going to be Ninja. All right, so this is my ES chart for last week, right? So May 12th, May 13th, May 14th. This is the day in question. This is Thursday, May 14th, where I traded. And this is what it looked like coming into it. And so in both days I'm going to cover, I'm going to start with the hourly chart so you can kind of see what the market had been doing, how it had been trending. And then on this chart, the blue circles are basically the bulk of the New York session price action. And so Tuesday, Wednesday, Thursday, this is the day that I got myself into trouble. Now, I really had levels drawn on my chart, which are not here, but they were at 7,500, which we had not yet touched, right in here. And then 75.20, which seemed like a strong extension point and a level that the market might want to test, right? So for me, those were upper targets. We had been pushing up for days. And if you guys have been following the price action, I mean, ES and Q have been moving very together and they are both like pushing new all-time highs. We've been bullish for 6 weeks straight now. It's kind of wild. Like this is kind of an unprecedented just flying. Like there really has not been a good pullback on the daily time frame of the bears having a retracement in order to get on point with this trend. It has just been the never-ending trend, which has been hard for me because I'm a little bit of a perma bear and I trade better with the bears. I don't know, like I'm a little contrarian in my spirit. So I have to watch myself. And so it's been tricky season this spring because it has been bullish IF and not given a lot of pullbacks. So here I am coming into this day and I would like us to hit these resistances because they're all-time high, right? But I would like us to hit these levels and then experience some bears. And so coming into it, I was sort of on the hunt for that. So that is what the kind of the larger backdrop of this trading day is. Now, let me tell you what it did. So this is not my best day. This is not the day that I am proud of or excited about or really want to tell you about, but I'm gonna do it anyway because I believe in authenticity and transparency. And I want, if someone else has had a day that they were not really proud of, like, let's normalize that. Let's normalize the fact that like not all trading days are amazing and glorious and perfect and have the beautiful P&L and a perfect outcome because they just don't. And well, they don't for real people. They don't all the time. It's easy to get messed up, myself included. And I have a pretty strong strategy and I have extracted many thousands of dollars from the stock market. So here we are. Okay. So I'm bearish biased, right? Because we're just pushing up. We're tagging these levels like this. And here is 7,500 is this center line here. So at market open, we pushed up and we hit that and we were walking around and we were rejecting. And so I wasn't quite ready to execute here and I waited. I hesitated too long on the shorts because I was trying to be like, we are bullish. We're pushing into no man's land. I was trying to counteract my bear. But these wicks here were trying to push up higher and they just couldn't. And this was a bearish engulfing that like thrust down and broke multiple layers down here. And so I finally shorted down here at the low of the pullback. That was my first short. And so that didn't work out. We basically were pulling back into the morning demand, right? This is where the market opened and it pushed up. It tagged that important like psychology number, that round number, which is often targets. Would have been a great long. I didn't get the long. And so I think part of me was like, had some FOMO of like, gosh, it would have been great if I got in because that was such an easy, but like it was such a natural first target because the market was pushing up and it was right there. It hadn't been tagged yet. It was a beautiful like whole number that obviously we have been pushing to for a while. So I didn't get the long, right? Obviously. And so here it started breaking down and I was like, okay, well, we hit the key number, a very important number. We hit it. So like, let's join the short. Like there's a lot of bearish aggression here. We could blast through all this and fall to who knows where I wanted it to fall to be honest. But I shorted here and nearly immediately the trade lost. It started pushing back against me right away. It was a very uncomfortable retracement. And so when this candle closed with a very strong bullish move, it didn't break the high of this candle pattern, but it got very high. And so then I just closed them all down. Like I was like, this is not it. Like this is a strong countering to the bearish attempt. And so I shut down this trade here. And then this is where I did shut down this trade. And I actually was like, okay, we're holding. This is a sign that we're going long. And I went long because we are bullish. We are pushing higher. Sure, we tagged that level, but we are also still bullish. The trend is up, higher highs and higher lows. And so when I shut down this short, I got in for a long position. And then I took it up here and I scaled out one. And then I was holding higher because I also had higher targets just based on extensions, fib levels. And then when this candle printed. And then I got the doji. I'm like, oh my gosh, we're overextended. I don't know where we're going. All-time highs make me nervous. Like, I just didn't buy it. I didn't buy that the bulls were going to be strong and continue pushing up all day. I didn't. And so I moved my stop up and I put it right underneath this candle and was stopped out. So it was a nice little win, a loss and then a win. I was pretty neutral on the day. And I just let it lie, right? And then it was continuing printing. I was like, I should have just stayed in. Like, we're still pushing up. This looks good for a trade. And so here I longed again, right? Because this gave me the bears tried. They stopped me out, but they couldn't get anywhere, right? They came back to the soft support of the moving averages and they were turning up. And so when this candle broke here, it was like broke high, and then pushed down again, broke high. I entered long here at that break. Immediately in profit, right? Because I'm trading with the trend. It was a good setup. All I needed to do was get entries. This was good. It had a little bit of a pullback. It was, the second pullback of the day, basically. And then it was turning again. So I'm like, okay, just trade with the freaking trend, right? Trade with the bulls. Like, it worked. The first trade was immediately stopped out because I wasn't trading with the trend. The second trade won, but I, squeezed it here. But I'm okay with that, actually. But it was easier. It was immediately in profit because I was trading with the trend. I was trading with direction and the stronger energy of the market. And so here, when I got in, again, when you're trading with the right direction of the market, it feels different. Like, you guys know what I mean, right? When you're in a winning trade and you're trading with the right direction, it's a winner. And so it was pushing up. And so I scaled out and I scaled out. And then the last one closed on this retracement here. I moved it up into profit, right? And so then I'm out. But then I'm out, right? And I'm in profit. Like, the trades worked out. But then, you guys, like, I had this level drawn and we tagged it. We tagged it right here with my last out, I think, something like that. Anyways, we tagged another level that I had an extension level on it. And I was like, okay, we're done, right? Like, I think this was my last exit. I felt really good about it. It started giving these doji candles after it tagged. This was my final target here, my last runner. And so I was in profit. I was out. It hit my level. And now it was giving the dojis. And I was like, like, I'm in sync with the market. Those were good trades. I'm green on the day. I feel good. I feel like I'm moving better with the market. I feel like I've got in sync with it. One losing trade, meh, 2 winning trades. I'm green. Like, I'm going to take a little bit more, but I'm not going to trade the longs anymore because, of course, we've gone too far. It's overextended. We've been extended for 6 weeks and now we hit more key levels. We hit my extension level and we hit that psychological level. So, of course, we must be selling. We were not. There was no signs to go short, you guys. On this candle, on this chart right here, there is no signs to go short. But what did I do? I started shorting right here. We got these doji candles and it started to, in here, you see I shorted on the wick because it started pushing down when this next candle opened. And so I shorted. Well, that didn't work. And I had a tight stop loss and it was stopped out. And so then I'm annoyed because I was green and I was green at the last 2 trades won. And this was like a stupid trade that was stopped out. But then I was like, it's not going higher. I just was like, in my mind, I just flipped. I flipped from focus, attentive, trading with the trend to emotion, charged, and bias. And I want to catch the top of this damn market. Like, I wanted to breathe air. And so I just proceeded to short. I shorted here. I added here. I added here. It just, every time I made a new high, I just added to my short position. I just averaged in. I averaged into a loser against trend when the market was bullish and it was pushing higher because I wanted to catch the top because I just, in my mind, we had achieved the targets. I had got in for a couple good entries on longs that I really believed in, like good, strong entries with the trend. And I closed those trades because I felt like we had hit a level that it should stop instead of just riding it, just riding the longs until the market rolled over. I didn't. I closed them down. I scaled them out. I locked in profits, which I'm fine with. But in my mind, it was because we were going to top out at some point and the bears had to make a showing. And this was overextended. We pushed up overnight. We pushed up all morning. We hit key levels. So I just short. And then I'm like way upside down. My P&L went from nicely green, like very appropriately green, to like way the frick red because of these trades that I'm like averaging into the loser on the short when we are in a bullish morning. And so finally, like, I accepted a reasonable stop and just put my stop on the chart and I walked away. And I was like so freaking irritated with myself. So I was like, what am I even doing? Like, I got in sync with the market. I traded well. I took 2 nice trades of the direction of the market. I was in profit. And here I am pulling some bullshit. And so it's very, very frustrating. And finally, I just I had to stop touching the chart. I had to stop. I recognized that I was trading emotionally and it was not cute and I was not doing what I was supposed to do. This is not my plan. This is not a setup. This is not even a C setup. This isn't a setup for me. I don't short a bullish market on every single time frame without any signs of structural change or transition. Like, yes, I have caught some extremes in the market, and yes, that's what I was trying to do. But I didn't have a sign or data or anything that told me that it was ready. Where, let's talk about how I did it later. But I finally just had to walk away and let my stop get hit. And it turned my day from green to red. And it was bullshit. And it was unnecessary. And it was not my system. And it was very frustrating. And I had some emotional carryover. I was irritated. I showed up with my team in another meeting later that morning. And like my mentor's like, you okay? And I was like clearly irritated in my voice. Well, it was this. Don't try and catch the top, people. Like, don't try and catch the top, Becky. 5-year deep trader. Like, what the fuck are you doing? That was the day that I had. And you know what happened? Like naturally I was in this trade and I was like, can I finally take my stop out? It's going to roll over. But like, when is that going to be? You know what I mean? Like, you can't just hold a trade indefinitely. Like, I don't have the pocketbook to just hold a trade indefinitely. I just don't. I am a retail trader. I got bills. I got kids. Like, I can't just put all my accounts on the line for a Hail Mary and accept no responsibility. That's not how I'm trying to be a trader. I need to be responsible and have risk management and a true system that I honor. And so I finally took the hit, and you know what happened? The market topped out 15 minutes later, if that. And that was the high. Like, we've had 2 trading days since then. That was the high of all of it. And it continued to fall. It just tumbled since then. Literally, like, 4 candles later, that was the high of the market at this time, speaking on Saturday, May 16th. That still remains the high that I was trying to catch. And I was 15 minutes shy of surviving it. And it was unnecessary. So I'm going to talk at the end about what I learned from these 2 days. But this was my Thursday, small reasonable stop out that I entered too late, honestly, and didn't work out. I don't hate it, whatever. And then 2 nice trades in sync with the market direction, good pieces. I had targets established and I scaled out and took profits. This last trying to catch the top is some bullshit that I am not trying to do. Is not. And so this is how we should not try to catch knives in either direction. Is that. But let me tell you about another day that is better. And then I will compare and contrast and we can just learn some lessons together. Okay. This is my Trade C account with Blue Sky, my Blue Sky accounts. And this day that I was trading was the very next day. So this is those bullish candles I was just telling you about that I was shorting. Basically, I shorted this whole freaking candle right here and got my ass kicked and lost. And then this was the top right afterwards. And we tumbled down. And so this was Thursday. And then we slid down overnight. We had this big gap down on Friday. And so we were coming into market open here. This is the 6 a.m. candle on Pacific Coast time. And so a 9 a.m. candle Eastern time. And so, clearly open, it did push down lower, but then it held, right? And so this is the hourly chart. This is the time frame that we were in. And this was a key level that was a factor on my chart. This is the day of the 13th. Is back over here. So that was the day before, I think Wednesday, Thursday, Friday. So this was the naked point of control that had not been traded through for New York session. So that's what makes it naked, is the point of control that had not been traded through for New York session. And so that was a key level on my analysis chart on the next one that I'll show you. But basically we had gaps up here and then pushed up and then fell down. But then this slide down was overnight. And so we're opening the day with a gap down. This point of control was still naked. And so that was a target for me when I was coming into my trading day. So this is what happened on that day. Smaller, we're zoomed in here. This is market open here. So I was not at market open. I had an early morning doctor's appointment. And so I was not even in my city, the market open. And so I wasn't available to trade open that day. And so I honestly feel like I would have shorted because the market all night had been breaking lows, lower highs, lower lows, pushing down. It made another lower low right here. And then it pushed up. And this would have been a beautiful lower high to short off of at open. However, I wasn't there. Hindsight, who knows? But I came to the charts around here is when I got home, I got my kids situated, and I was looking to see if I could find a trade. And so what I saw was that we hadn't tagged that naked point of control. That's what I want to show you on the other chart, is that this dotted line here is the naked point of control from a couple days ago that would have been my logical target for a retracement up to it. overnight, you see how it worked perfectly. It was kissed right to the tip, and then it made another lower low. Clearly, it is acknowledged on the charts. I love point of controls. That's definitely a big part of my value area trading volume profile. And so but it hadn't been touched on New York session. This one got close. This is my IB high, and it did not quite get there. It's at 67, 75, and 71 is the point of control. Now, there is some wiggle room with that, right? Because a level is like, it's a gray area. It's more than just a number. But to me, it hadn't yet been tagged in New York session. And so what I saw here was that we pushed down and made a lower low, and then we were making higher highs and higher lows. This here, we broke higher than this one. And so when we slid back down here, I thought this was the retracement to this support area here, this whole conglomeration, consolidation of the morning. Right here, it kissed it, and then it was turning up. So I longed right here with the idea that I would take this piece. That was what my trade plan was. It was Fridays. Fridays are often smaller bodies, especially after a big gap. They tend to dink around in a smaller range. That I don't know if you guys have noticed that, but I have in ES and NQ, is that you will get a tighter New York session price action day on Fridays, and it's a little bit more bouncier within range. Oftentimes, especially if a gap has come into that day, and so the daily candle already has substantial size when you factor in overnight. And so for me, like, the small range did not scare me necessarily. I was just trying to take a piece of it. But that trade was stopped out. It was stopped out right underneath of that candle, somewhere in there. I think I put underneath this candle. And so this trade was stopped out here when this fell. And I was like, okay. So I looked back at my overnight, and I drew this level based on these two like supports holding and then breaking down. So it's basically this green box here is my support zone for New York session, which is from these two holds here, and then the breakdown, and then the hold at open, my IB low, initial balance low. And so that's where I drew this green zone. And I was like, okay, this came down, but it didn't come all the way down to this support where we had kissed it, tapped it, pushed into it, and then traded. And so I thought, this break of structure here, this clear break on this 5-minute chart, is showing to me that we could come back down to this level. And so I shorted here and I added here. When I closed out this long position, I switched and I took the scalp on the shorts from here to here when we tagged this. You see I closed my shorts when we tagged this lower support. And I'm like, okay, so we did the pullback now here. And so the first long failed, but then I was back to green, like neutral green, like barely green, basically on this short scalp here. And so that was fine, right? I took a small loss, which was reasonable within my risk parameters. And then I took a small gain down to the level. But here I was like, I don't really want to hold a short because my read on a lot of Fridays is rotational bouncy. And this was the demand of the morning. And so I wanted to see what would happen here. And so in these wicks, basically, I started building my long position and buying the market up in here because it has fallen down into my demand of the morning. This purple line here is the value area low from this session last Wednesday that we were now trading back inside. And so this was another confluence for this demand area holding. It was a value area low. And so this whole area is where I wanted to see if the bulls would show up. And so you see, I didn't just have one fill. I had multiple fills here. Every time you get a new arrow, that's a new fill. And so I was building my micro MES position here in this demand area. And then I just held, like, I recognized that there was a lot of chop here and I didn't know if it would get all the way up here, but I was out of time, you guys. I don't know. Everyone knows this, but I'm still a nurse. I work in acute care hospital setting, and I work Fridays. And so I just had a very short time actually to trade this day because I was gone in the morning and I had to come home and get my kids situated and get ready for work. And so it was just a short period. And so I debated holding for my target. That was my target over here, but I was just out of time. And so I decided to just shut the trade down. This was my third trade of the day. I wouldn't be able to be at home to manage it. I would just have to let it ride. And so I opted to just put my target right inside this consolidation here. And my target was filled up there, which was a beautiful win. Like, I think I had like maybe 9 micro MES contracts. And so I think it was like $900 win on Friday. And so that was kind of a beautiful push up out of my demand zone. And so this is the contrast to yesterday, right? Is that I didn't dislike my first trade, but it was stopped out. Like this support area hold here could have held. And it did look like it pushed up, broke the level here, and was scooping down for another potential bullish move. I took a reasonable stop. Wasn't feel triggered. I just the trade didn't work. And so I was stopped out. But then I saw the next trade was going. I felt like if this support wasn't holding and we were breaking structure, then this one down here was the trade. So I took the next logical trade, which was the short down to that area. When we got to that area, I waited to see what it was doing. And when it was holding and wicking away from it, I built my long position because that was my bias, is that we were bouncing. And so we had pushed up and broken the high. We came back down, tested, made a lower, A, B, C, an A, B, C retracement back to the higher demand zone of the morning. This is where I want to see if the bulls are there. And sure enough, every time it would poke into it, it was wicked up right away. The bulls were there. And so I took this position up to a logical target. I exited when my trading day was done and I didn't have time to focus anymore. So I kind of loved all of these trades. Like all of them were in sync with how I saw the market, how it was moving that day, what my trade plan is, what my approach to trading is, what I like to see on my charts to get me interested in a trade, and how I like to manage my risk on them. So nice, clean, beautiful, strong P&L morning. Not perfect. I mean, perfect. I don't know what you say perfect is. Like there was a loss in there. And then there was a win, and then there was another good trade that I, again, didn't hold to my ultimate target because I had to live my life and I needed to be able to pivot, and I wanted to not be micromanaging this chart while I'm driving on the freeway. And if anything, I might have moved my stop to here and it would have been taken out. So I think I took more of a win by getting out here and then not squeezing my stop. Who knows? But this is a day that I would do again in a heartbeat. This was a great day. And so do you see how the energies were really, honestly quite different between the Thursday day that I traded and the Friday day that I traded, because they both, I went in with intentions on trading my best system. However, one of them, I got caught up in emotional trading and really got biased and messed around and found out. And then this other day, I just was super focused on my system and I traded it to the best of my ability, and I managed my risk and I stayed focused and I watched my levels, and then I watched my levels for what it would do next. And then I traded it appropriately. And so this is where there's some lessons, right? There's some lessons to all of this. Let me stop screen sharing and just chat with you and talk about my life and what I learned that day. There was definitely some lessons in this. And so don't marry a bias, right? Like we've all heard that. Well, I was married to the bias on that Thursday. I really felt like the bulls were the move, obviously, because I took a couple nice longs. But I was cautious in the longs to not just hold them until the price action turned, instead to lock them out at my predetermined targets, which is fine with me. But then when the targets were hit, I was like, okay, of course there's going to be the bears. I was biased to the fact that the bears would show up. Now I was right, but I did not wait for the actual information and I didn't have patience in order to let it set up. So that is definitely, like trading 101, right? Don't marry a bias, be open to the data and wait and see your confirmations in order to get in a trade. And then also, for God's sakes, Becky, like don't fight the trend. Like, I don't know why. Like I have a contrarian spirit, I don't mind going against the grain. I don't mind catching the tip. But what I know is I need to have a specific system for what I have to see and what it looks like in order for a trend to bend and how to get into it. And I do have an established system and I have a good setup for that. I did not trade that system on that Thursday at morning. I didn't. I tried to front run it and get the best fill, and I didn't wait for any sort of confirmation. And hence I had my ass handed to me because I was fighting the trend and I wasn't waiting for my confirmations in order to capture it. And so even if we're pushing into free air, I know everyone is talking right now about how you trade all-time highs. This is not it. My example is not it, because I was trying to counter trend and counteract the all-time highs on a day where we were pushing all-time highs. And I did the cardinal sin of trying to catch the tip when you were fighting a trend and you're not waiting for your confirmation. So for God's sakes, have a system established about what it would look like to break that structure and then come back for a retest and how you manage your risk. Write all that out, which I have, which is even more of an annoying part of this. But I know that, right? I know that I need to not fight the trend and I need to be a better trend follower, because the market trends a lot of the time. And overall, the stock market is bullish since inception. And so that is something that I'm still obviously battling on a day-to-day basis. And thank goodness I do recognize it. And I did finally pull my head out of my rear end in time to shut it down. But then who knows, I would have been rewarded had I just held and it did turn, and then it would have turned into a green trade. This is a lesson that I needed to have, clearly, again, to not do this. When you were breaking all-time highs, just trade with the freaking trend and trade your best setup that you were presented with in front of you, right? Now, another lesson is to keep the leverage small and reasonable so that any one trade can't wreck you mentally. Because you guys, I averaged into that catching the top. I kept shorting. We would break the highs and I kept adding shorts. I had my fills on that chart. It wasn't my main account because thank goodness, I didn't trade my other accounts on this. I guess you can call it my degenerate chart, because I did recognize that I was doing a choice that I don't prefer to make. And so I was only doing it on one account setting. So there's that, right? But I didn't need to do it at all. And when I did do it, I kept averaging, like I kept shorting as it kept pushing up, which is like so naughty on so many levels. And so it really did drive me crazy. I was upset that day. I was frustrated. I was exhausted. I was irritable. I had regret, which I hate that feeling. Like, and there's carryover, right? Like I can feel it in my shoulders when I talked about it on the trade, when I showed you my chart, when I'm talking about it now. Like I didn't need that. And it's because, had I done one and given it room, maybe I would have felt some kind of different way, but I didn't. I kept averaging in. And so the leverage got higher for no freaking reason. Like I was adding against good, throwing good money after bad because it was not the trade. And those are the type of behaviors that are not sustainable. And I am glad that I kept it to just, one account setup and not everything. Like sometimes I will trade the same trades in all of my accounts, because if I really have an A+ setup, like I want all my leverage on the line. This was obviously not that. There was nothing A+ at all about trying to catch the top. And so, there was some ways that I did keep it contained, but even so, like it wasn't worth the toll that it took on me that day to be so crabby. Like I don't like being crabby. I don't like having regret and irritation about how I traded. Even if I have a small losing day or I take a loss within a mixed day, I don't need to have carryover or frustration with it, because I have a really full life. I have children and plenty of other responsibilities, and I show up in different ways in the different factors in the trading industry, And so it's not worth it to me to like have that emotional carryover of pulling some bullshit and like thinking that I can get away with it. And so I think that everyone, whoever the listener is today, probably has a similar situation of like, you don't need to have the frustration, exhaustion, irritation, regret that maybe we would have on the days where we pull some bullshit on the charts. And so that, for me, the biggest lesson on those days is like, I didn't need that in any way. Like my accounts didn't need that big hit. I didn't need that to my heart, my ability to stay focused and positive and optimistic. Like I don't need my vibe or my energy impacted by making poor choices outside of my trading system, because my trading system, 3 years deep, I spent a lot of time fine tuning it and consulting and trading and back testing and forward testing. And, I feel like when I trade that system, I trade really well. And that's how I get my payouts and my consistency. And so when I monkey around like this, it's just stupid. I don't like saying stupid, but it just was like really unfortunate and unnecessary. And so I think that the big thing is like, if there's not a clear trade plan happening, then I don't need to have a trade, right? If I'm not seeing a key setup that fits my strategy, then I don't trade, right? If the market that is presenting doesn't favor my edge, then I don't need to have a position. I don't need to just decide to throw money at this. And like I have a trade plan for trending days, and I executed it well twice that day, and that got me the green. So like, you could stop now. You know what I mean? Like the market hadn't shown me that it was turning, and it was giving me an excellent shorting opportunity. It did not present that yet. And I was just trying to front run it, and I did not need to. And so if in that moment, in hindsight, what I wish I had done when I was journaling it out that night and thinking about it is, if I wanted to short so badly and the market hadn't broken structure, I needed to walk away. Like I needed to shut down my execution screen. And then maybe I look on my phone every 15 minutes and I wait to see the confirmations of the turn. And had I done that, then maybe I would not have had another trade, and I could have had a 6 short at the end of the day. Because if you look like that day, it did end up rolling over, and then it shorted for the rest of the day 15 minutes later. So that is another thing, right? If I have the energy to want to try and catch the top, then recognize it's not doing it yet. It's not giving me the data that is time yet. And maybe it will happen this day, but I need to not front run it until I have the edge in place to trade it. And so that needs to be something that clearly, apparently, I need to take that lesson again of, if the market isn't giving me my setup, then it's not giving me my setup. And I should not behave recklessly to just throw money after it, because that day went from green to red, and it didn't need to. There was no business doing that. This is not a new lesson for me. 5 years into my trading career, this is an established lesson that apparently I just felt like that day I had some kind of vibe about me that I just really was waiting for the bears. I like trading with the bears. I wanted to take more money from the market. So there's a little bit of greed with that. Like I felt like I could have a bigger day, and why not this day? And so anyways, that sucked. But one thing that I did do well that night is I did take the lessons and journal it out, and pulled myself out of my head of like feeling frustrated and irritated. And I did other things that bring me joy, and I focused on my family, and I was able to turn my mind, right? I was able to pull out of that negative vibe of like frustration and irritability, and more so like, I know what I did wrong and I am facing it head on and I'm admitting it fully to myself, and I'm going to do better tomorrow because I know how to do better. And so the next day I had that early morning appointment. When I came back, it was like, just trade well, trade your system, trade the leverage that you can take without being emotional with it. Let that shit go and come and show up as your best trading self. And so literally the very next day was 3 trades, and the first one stopped out, but it was a small leverage. It was reasonable. It was a pretty good setup, and it didn't work. But my next 2 were green trading outcomes because I was careful. I was cognizant. I was flexible and flowing and adaptable with what the market was delivering. And so I was able to catch good trades, and that day ended beautifully green. I recognized my situation of no longer, I can't be in my office anymore. I don't have any more time to trade. My time in the office is done. It was a short trading session for me. I locked in profits, even though it did go to my ultimate target, and I didn't have carryover. And so that for me was like a huge win for this week because I recovered quickly, I guess, essentially from some BS on the charts where I mismanaged my situation and I traded inappropriately. Well, okay, fine. It happened. That happens. Like, let it go and trade your best system. And so the fact that I could have that turnaround then the next day be a solid execution morning, for me, that is a win as a trader. The ability to move on and still show up as my best self. It's that whole vibe of one good trade, right? One good trade followed by one good trade. That should be the energy. And on these charts, I think there was 4 trades on Thursday and 3 trades on Friday. And of them, only the one is what I really regret. Now, of course, I did average into it. I made it big. It was like, I had multiple entries. Anyways, it was one poor trade amongst the 7 trades. But that one created a very rat day that was a hole that I have to dig out of. And so that, like, recognizing that 6 trades out of 7 are good, logical, smart, reasonable trades. And had it only been those 6 trades, both trades would have been beautifully, strongly green. Honor the system, right? And so recover quickly from losses, recover in your mind to let it go and just recognize to lean into your good system and trade your best setups as you develop your trading plan and you have a strong playbook of what you look for, what your trade setups look like, how you get in, how you manage them. The more often we can just tune out the noise and the biases and just focus on what the data is presenting and trading our system, that is how the consistent profitability comes because the system is so dialed in. And so I just wanted to talk to you guys about trades that I wish were different and the trades that I'm proud of this week because I'm still just a human and I'm trying to be my best trader self. And I want to just talk about the markets more with you guys because I love talking about the markets, and I do that, with my communities that I'm in and when I coach at Blue Sky. And so I'm just a real trader and I'm an imperfect human and I'm trying to show up and do my best. And so this is what it looks like to be a futures day trader, is putting leverage on the line and managing it to the best of our ability, and then sometimes succumbing to biases to catch the top of the market in all-time highs. And that happened. And I'm going to keep showing up with my best self and bring Monday with my intentions on doing my best trading that I can. And I'm going to start doing these episodes more so with you guys of like best trade, worst trade. Like, what am I doing that I like? Did I get frustrated? What sort of things did I succumb to again or whatever, and how did I pivot out of them? Because I think that these lessons that we can all learn together will make all of us stronger. So please like and subscribe if you haven't. Market Mamas is one of my babies. I have 3 human children, but Market Mamas is my business baby, I guess. She's where I talk about what the heck I'm doing with growing as a futures day trader and in the trading world and in the trading content exposure world, trading coaching world. And let me know what you like and what you don't like. And I'm here for all of it. And I want to talk out how we can be our best, strongest trading selves, because I do think that there is plenty of room at the top for all of us. And we can make really life-changing money and impact everyone that we love with the work that we're putting in and the results that we can get. And that's what I want for all of us. And so I'm going to keep being my most real self and showing you my fills. And we'll just keep growing together. Okay. Take care, everyone. Please leave a comment if you have any questions or want more or less or whatever you want from me here at Market Mamas. I'm down to be your host and talk about all the things futures day trading with you. Take care, everybody.